Hey everybody, Brian here. It's Wednesday the 22nd. Let's look at this market. We did run into a little bit of selling here today, and that of course occurred right near the 61.8% retracement that we had pointed out yesterday on the S&P 500. The 10-minute time frame, we are still above a rising 5-day moving average. So right now we're looking at this as a market that's trying to settle down. If it can come down and hold above the 5-day moving average, worst case would be a pullback down towards this level. That is the worst case bullish scenario, would be a pullback down here. Ideally, we would like to see maybe a little bit, this market to catch a bid near the rising 5-day moving average. But, we are below the volume weighted average price, and that flipped right over here. And about midday, I'd mentioned that it seemed as though the market was getting tired. We spoke about a short that had the potential to get down to to the 2-day volume weighted average price, and that seemed like the real easiest trade of the day was the move down to that as it bounced nicely from there. And that kind of got really choppy, and of course right at the end of the day we did see another round of selling that took us below that little level we were talking about yesterday. Now this isn't really what I would view as a significant level, just a level that we thought had the potential to be tested and try to hold today. In fact, we did test that earlier on, got a pretty decent bounce, but that bounce came where? Just below the declining volume weighted average price, and the selling came from there. So we remain in a very tricky environment. Don't be frustrated by what this market is doing. We've got the market dropped off the 10th floor and bounced up to the 8th floor. Now we have to see if it trickles lower or if it just completely deflates. My feeling is that I think that we've got the 200-day moving average just below us here at about 190.70. If that's to be tested, that's about where we have that 5-day moving average as well. So for now, as long as we remain above that level, we're going to look for this market to hold, meaning that the short sales that you're initiating in here, my belief is they should be only viewed as day trade candidates, not something to be held for now, not while we have a rising 5-day moving average. I'm not going to sway from that discipline. It's treated us very, very well over the last decade or more. The NASDAQ, of course, this one made it above that higher high, above our flat to rising 5-day moving average, and we're still above that 5-day moving average, which is rising. This afternoon, of course, we saw this market come right up to daily R2, I'm not daily R2, but daily volume weighted average price, and it pulled back to the pivot and did find some support there, Hal. Hal was calling this support here, and I said a little too early so far, but yes, we did find a little bit of support there, and that came, of course, after a break of the 2-day volume weighted average price. I was speaking over here about if the market broke below the 2-day volume weighted average price, it might be a decent short, but it had rallied up instead, and by the time it broke that 2-day volume weighted average price, you have to ask yourself again, where had it come from? It just came from $96.90, so it just dropped 40 cents to get there, and there wasn't a good place to put a stop there. So I personally did not trade that. If you did, congratulations. I think that what we want to look at now is we can even look in these markets. I guess today being Wednesday, we could look at the 3-day volume weighted average price. So tomorrow maybe 95.70ish is going to be important, and on the NASDAQ, the week to date the S&P, the week to date volume weighted average price 192.30. But again, the more important level will be that 5-day moving average. We want to see how it behaves in there, and then this is the bigger potential band of support. The Russell 2000, this is looking, we've got mixed messages here. Number one, we have a rising 5-day moving average, and we see that, of course, this market had broken that volume weighted average price early on. I think it was Fish who asked me about, at this point, asked me about shorting it, and I said, it's down at the 2-day volume weighted average price. That's why I thought that the SPY was better at that point, which was right over in here, because it just seemed like, well, it's leading the market to the downside, and maybe it was going to find some support there. It did initially, but then, of course, that broke dramatically, and here we are below the volume weighted average price, of course, and for the week to date, we're below that as well. We've come and almost closed this gap as well. Now, on the 10-minute time frame, we've got the rising 5-day moving average. This area right in here, I think, basically what we want to see hold is really 108.5 to 109. This is our prior band of resistance. Let's take a look at the 30-minute time frame. So this is our prior band of resistance right in here, and if that holds the support, then perhaps we don't don't see a bigger breakdown. But of course, the issue is we have an ugly looking daily chart. In the weekly time frame, we have, let's just open this up a little bit to see the scaling a little bit better, that we have still, this market is on the weekly time frame guilty till proven innocent. It's come up to that 110, 111 area. Today's high was a little higher than I expected this rally to go, but 111.06, and then it's pulling back. So I think that this is going to mark a very important weekly high. That is, that if we see it break down further, then we still look at this as guilty till proven innocent on the weekly time frame, and this is potentially our next lower high. So that will be important for shorts. If ideally tomorrow for the short position, we can talk about that, is maybe we open down a little bit and then we rally up and then break down below that 108. Getting back below 108, I think, is going to be a very tough prospect for this market to recover from. That not necessarily that will fall apart completely, but perhaps we just we break down below that and hold below it. And then, of course, we are in the middle of earnings season, and we've got a lot of volatility in the stocks. So we have to take each stock based on its own merits. The semiconductors did close their gap, and they got up to, based on Fibonacci from that failed breakout to the recent low, they got up just beyond that 50% and close to a 61.8% retracement. Let's get rid of that line there and draw in a horizontal level here. So we've got the 150-day moving average right in here, and 48 to 48 and a quarter I think is going to be an important level tomorrow, and then so 48 to 48 and a quarter. If that fails, then the more important level right now is where we broke that first higher high. So right now we do still have the higher high, and this is looking like a potential higher low, but we have to be very cautious because of the longer term time frame and the fact that it's just so ugly. And on the financial market, again, very strong snapback in here. Perhaps it holds, but right now it's rallied up to a prior important band of support in here, and that support seems to be holding as resistance. If this market is going to recover, ideally it comes down and holds above 22 and a quarter to 22.40-ish. That would be an important band of support. If it pulls back to there, stabilizes, and then pushes beyond 23, then maybe this market, the financials can continue to move higher, but it's really just pretty ugly out there, and really not a good environment for putting on swing trades. We have to look at this market as, again, it's very risky, and we need to look at it and say, take each stock based on its own merits. Today, Apple was up 52 cents here. It broke to a new all-time high. Don't forget, a lot of times that those breaks to all-time highs after the stock has already made a run, in this case from 95 basically up to 103, oftentimes we see that it traps the buyers short term, and then we see the market turn lower. If you need any evidence of that, of course, we've got the semiconductors were a perfect example. We saw that the S&P 500 was a perfect example too. So don't be so confident because Apple is at an all-time high or hit an all-time high here today. Instead, look at it and say, has it expended too much energy, and where does your stop go if you are personally long here still? The 5-day moving average is a deep pullback if it's to make it down towards there. So I think a tighter stop would make more sense. Either way, we still have what I think are treacherous conditions in this market, and you're going to need to continue to treat it with the respect that it deserves, and understand that you will be looking at a lot of moves and missing them and saying, wow, I wish I could have done this or I should have done that. But the fact is, these moves are trickier to catch right now, and your number one priority in this type of environment is preservation of capital.